Talks taxes. He has been for over 45 years, and there's not a human on the planet with more experience solving problems on behalf of taxpayers. He wants to solve your problem whether you know you have one or not. So if you do have a tax problem, get a hold of him by calling his office or visiting his website. But if you don't have a tax problem currently, your current tax problem is taxes themselves. So let's get into the policy issues of today. And today we're celebrating a holiday you probably have not heard of. A holiday you probably have not heard of. I'm sure you've heard of Memorial Day, Labor Day, Independence Day, Martin Luther King Day, but have you ever heard of EITC Awareness Day? No, of course not. You don't even get a day off. As a matter of fact, someone else gets a day off for you. You have to go to work for EITC Awareness Day. EITC Earned Income Tax Credit Awareness Day is Friday, January 23rd, 2026. That is tomorrow as of the time of recording this. Hopefully we'll have this available for people but by the time it's EITC Awareness Day. But it is a concoction of the IRS and the National Taxpayer Advocate to help broadly publicize the fact that they don't think that enough people are taking advantage of the EITC, the Earned Income Tax Credit. They think that there's more people who it's available to. Essentially, it's too broad and too complicated, and people don't understand it, and so they miss out on their available deductions, or in this case, credits. That also glosses over the fact that the EITC is one of the 4 big, most fraudulent advantage of welfare programs administered by the Internal Revenue Service. Where are we at with what does this really mean for taxpayers? Should we be looking at how we can take advantage of the EITC credit, the Earned Income Tax Credit, or should we be worried about being the ones doing the frauding?
The Government Accountability Office, Josh, every year, as long as I've been paying attention, 25 years, 30 years maybe, has had the EITC on its list of high-risk government programs. A GAO high-risk government program is a program that's particularly susceptible to fraud and abuse. When we're talking about the EITC credit, we're talking about the Earned Income Tax Credit, as you said. This is a refundable credit. And what that means is if you qualify, then you can get more money back from the government than you paid in the first place. All right, so let's say you paid in $3,000 and you get a $4,000 EITC credit. You get $1,000, but you get $4,000 back from the IRS and you only paid in $3,000, right? That's what a refundable credit is. It's a welfare program that's administered by the federal government. And there's a number of these refundable credits. There's a number of refundable credits in the tax code, and every single one of these refundable credits is generally susceptible to fraud and abuse, precisely because it's a program of free money from the government. And so what happens is you got 2 classes of people. You really got 3 classes of people here that are claiming EITC credits that are not entitled to claim them. The first class of people are the ignorant, right? I don't know what the rules are. I claim the credit on my tax return, but I don't qualify. But it's not because of fraud or deception. It's because of ignorance. The more complicated the rules are, the more susceptible these rules are to misunderstanding and abuse as a result of misunderstanding.
Which sums up our entire tax system.
EITC is a wildly complicated calculation. It never gets easier. It only gets harder. That's the first class of people. The second class of people are the fraudulent claimants. These people know they don't qualify, but make stuff up on their tax return so they can get free money from the government. The third class of people are unscrupulous tax preparers. Tax preparers that are not legitimate will often advertise their services by saying, hey, I'll get you a bigger tax refund than the guy down the street, but I want a piece of that refund. I want to wet my beak with your refund money. One of the chief ways they do this is tax preparers fabricate EITC claims that the taxpayer doesn't know about. So what the IRS calls preparer enforcement cases, where they'll pick out preparers that have a extremely high incidence of EITC claims among their clients. And they'll audit a handful of those clients and see a pattern. These clients don't qualify for EITC. These facts were made up. Right? So we got the ignorant claimants that are making erroneous claims. We got deliberately fraudulent claims made by certain taxpayers and deliberately fraudulent claims made by tax preparers. All of this leads up to the fact, Josh, that according to watchdog agencies, Treasury Inspector General for Tax Administration and the Government Accountability Office, the GAO that I mentioned earlier, says that in the case of EITC, about 27%, almost a third of all of the claims paid out on EITC are not eligible claims. They're claims that are a result of fraud or erroneous claims. So Josh, this is a huge problem. The taxpayer advocate comes out with her EITC Awareness Day, and she issues this news release that says, hey, people aren't taking advantage of the EITC. They should be doing so. We want people to be aware of it. That's completely contradictory from the reports dog agencies that have been released, Josh, over the last 25 years. EITC fraud is not new. It's been on the GA list of high-risk programs for 25 or 30 years. So it's astonishing to me.
Are they fishing for more fraud, or are they hoping more people take advantage of what is essentially them having to give out money?
That's the $6 million question. It's a government program. And I will say this, if you are entitled to a tax deduction, you should claim it. If you are entitled to an exemption, you should claim it. If you are entitled to a tax credit, you should claim it because it reduces your tax liability. And in the case of the EITC, it can lead to a refund of more than you actually paid in. But that's in the law. Congress wrote it. The president authorized it. This EITC has been on the books for a long time. If you're entitled to the claim, you should make the claim. There's no doubt about that. But what troubles me about the taxpayer advocate's news release is she was, in the context of this release, she's completely silent the requirements of the program and what the eligibility requirements are. And she's completely silent about the EITC fraud, even though they've been well aware of this for decades.
And especially with fraud being a hot topic in the news right now, whether you believe that the Minnesota fraud is fraud or whether you're delusional, that's a choice you can make. But the fact of the matter, why would a government agent now be basically encouraging fraud is what I'm getting here.
And that's exactly my objection to what's going on here. I don't have any qualm about the taxpayer advocates saying, hey, there's an EITC program out there. If you qualify, you should claim it. But it really needs to go deeper than that. It can't be just this simple flowery language that ignores the problems. The taxpayer advocate should be talking openly about the level of fraud in connection with the EITC program. And they got to be talking about, hey, here are the qualifications. We need to publicize the qualifications, not just the presence of the program, but the qualifications. If you fall into these various categories, primarily it's an income-driven thing, right? You got to have earned income. That means you got to have income from a job someplace that you're out working to generate the income. Then that income has to be within certain brackets and various other components of this thing. You can qualify if you have kids. The rules are one way. If you don't have kids, the rules are another way.
No wonder people don't understand this stuff and don't really grasp the complexity of whether or not they qualify for it. What I want to hear is, do we have a number, what the percentage is of confirmed fraudulent claims on the EITC is?
As I said a minute ago, the documented reports here that have been published by the Treasury Inspector General for Tax Administration and the Government Accountability Office, the GAO, show the improper payment rate with respect to the EITC is 27%.
That's over a third. Are they doing anything?
Josh, we're talking about $21 billion in claims that are paid out that should not be paid out. This is at the federal level in 1 year. This is not a small thing. And this is just one of 4 credits that have been looked at here.
I was going to mention the next 4 credits, but before we even get into those next 4 credits, because I want to talk about those too, are they doing anything about, they just say, oh, it's 27%. Okay, fine. Are they going to reduce the budget by 27%? And then whoever doesn't get it, and that sucks to suck? Or what? How does that even work?
Congress several years ago, about 10 or 12 years ago, passed a law that says the IRS has got to get their improper payments down to 10% or less. So they've got to institute screening processes that get those improper payments down to 10% or less. They're at 27% with the EITC, and that's not even the highest one. We talked about these other credits. The net premium tax credit is one. The American Opportunity Tax Credit's another one. The additional child tax credit, that's another one. And of course, the EITC. All 4 of those credits, Josh, are well above the 10% number. So the IRS doesn't have in place the screening capabilities to look at these things and make effective judgments on the face of the information provided as to whether that tax return is correct or not. This is the fundamental problem with the income tax, Josh. You can make a claim on a tax return, whether it's an EITC credit or charitable contribution deduction or business travel expenses. You can make a claim on the tax return that is not supported in any way by documents. And the only way the IRS can ever know that is if they actually audit the tax return. All right, we're talking about 165 million individual income tax returns that are filed this filing season. I'll bet it's upwards of 15 or 20% of those returns that claim an EITC credit. We know that 27% of those are erroneous, fraudulent. How does the IRS audit all those returns? The answer is the best thing they can hope to do is educate people on what the rules are, try to ferret out the fraudulent tax preparers. That's an aggressive thing that they should be working on. The other thing is they got to simplify the doggone.
Answer is simply get rid of the welfare administered in the tax code. Get rid of the welfare programs administered in the tax code. If $1 is fraudulent, it's $1 too much.
Speaking of the fraudulent dollars, there's a number here that I saw, Treasury Inspector for Tax Administration, that shows that as much as $2.8 trillion in erroneous claims through these various credits has been paid out by the federal government over the last 15 years. $1 trillion, Josh. That's about a third of the federal budget for 1 year. This is huge money that's lost to waste and fraud.
This is actually a genuine problem. So what I'm hearing is it as simple as picking one of these 4 credits, making it up, putting it in your return, claiming it, getting some free money back from the government, and then just hoping because there's 320 million Americans, 350 million Americans, however many million Americans we have right now, that they're probably not going to audit you. That's what you're saying.
That's the game, Josh. That's the game that these fraudsters play. It's a numbers game. Will the IRS find this or not? If the claim is not overly egregious, maybe the chances are that they won't find it.
I'm hearing a reverse fraud lottery. A 1 in 360 million chance that you get audited or free money from the government.
Let's be accurate about the numbers. The population of the United States is roughly 340 million. But that's not the number of tax returns filed. There's about 165 million tax returns because there's an awful lot of people married filing jointly. There's an awful lot of people that are not required to file a return. You can't go by population. You got to go by the
returns filed. How many of those get audited?
Not very many. The global audit rate, less than 2% for sure. And so that's the phrase they use in the literature, Josh, is the audit lottery. You use that term, audit lottery, in the literature. And this is why the IRS has got to focus on the fraudulent tax preparers, because you can target one tax preparer and hit several thousand potentially fraudulent tax returns. And we see cases like that going on all the time.
Credit system, every single credit, each one of the 4 credits that we have just discussed is a avenue for fraud. And if there is
no question about it, this is true of any refundable credit. And we need to understand as taxpayers that these refundable credits are welfare programs administered through the Internal Revenue Code. Under no circumstances should a welfare system be administered through the tax code. If the government wants to set up a welfare program, and they're not set up welfare programs, there's dozens of them at the federal level, there's dozens of them at the state level, they're everywhere.
Agreed. So I have a question here. Now, a completely hypothetical question, and for legal reasons, it is a joke. What is the percentage of fraudulent claims that the IRS would need to start seeing in order to say, maybe we should just eliminate these credits entirely?
There's no number, Josh, that Congress never, and remember, the IRS has no power to eliminate these credits, right? These credits are created by acts of Congress signed by the President of the United States. I'm not a fan of the IRS, but to be absolutely fair, this is not their fault. This is the fault of Congress creating a massively complex system of welfare that the IRS has to administer.
But if we were to enact some kind of malicious compliance and just start claiming every credit you could, again, this is hypothetical, don't go do this. How long do you think it would take for Congress to go, maybe we shouldn't have the IRS administering welfare programs that can be defrauded just by simply...
Well, that's what I was just going to answer. I don't think there is a number. I don't think Congress will ever stop creating these programs that the IRS is supposed to administer. They'll just say, what happens is the IRS goes back to Congress and they say, we have difficulty administering this program for this reason and this reason. We need more money, manpower, and equipment. That's the only solution that ever gets proposed.
That is the budget. The budget inflation game is every bureaucrat's go-to playbook.
That's exactly right. That's the only solution they ever have. And the only debate that Congress ever has is, should we give the IRS more money, more equipment, and more manpower? manpower. Now, we talked about this in our last podcast, the fact that the IRS's budget is actually being cut. They've had roughly $11 billion clawed back from their Inflation Reduction Act subsidy that happened under the Biden administration. That was $80 billion, and most of that's been clawed back. They've clawed back another $11 billion in this budget cycle, and the IRS's annual operating budget is going to drop by about 1.1 or so billion dollars. It's going from roughly 12.3 billion down to 11.1. It's being cut by about 9%, right? So the budget is being cut. They've lost 25,000 employees over the last year. So between the budget cuts and the loss of employees, they've got a legitimate concern to say, hey, we don't have the manpower to keep administering these welfare programs. But they never say that. What they say is we need more money and more equipment and more manpower to administer the welfare programs. This is the disconnect here. Congress does not seem to get it through its head that these programs are highly susceptible to fraud and abuse, and they need to be taken out of the Internal Revenue Code. There has to be a completely different system for administering these things that do not involve claims that people have to make through their tax returns.
It's a unique position where we are watching the IRS being choked to death slowly while also being forced to administer money out to the masses. Almost for insanity.
It is insanity. It's mission creep. The fundamental responsibility of the Internal Revenue Service is to collect the nation's revenue. That's their job. Collect the nation's revenue. Go get the money. They're not a welfare agency. They're not a support group of any kind. They're not responsible for helping widows and orphans. That's not their job. Now, I'm not saying that widows and orphans should be cut loose to fend on their own. What I'm saying is we need to keep the IRS's mission narrow and focused. And if we keep the mission narrow and focused, it becomes simpler. But as Congress gives the IRS more and more responsibilities, their resources get spread thinner and thinner. And the more those resources are thinly spread out, the less they can do their core job and the less effective they are at doing their core job. And simply has to change. We've got too many wealth programs in the country, and we got too many welfare agencies, federal, state, and local, to justify using the tax code to provide welfare benefits through refundable credits. It's nonsense.
I agree with you, and we both know that the real reason that they do that is because it's hidden. They can do what they want without people understanding what the heck's going on. That's why these credits exist, is because they're able to give out money without people understanding what exactly is going on. It just needs to be ripped out by the root. That's all I have.
Yeah, ultimately, we've got to rip the income tax out by the roots. But if there's a place to start with simplification, it would be with these refundable tax credits.
Because they're just fraud.
Highly susceptible to fraud and abuse in the three categories that I talked about. Ignorant citizens claiming a credit they're not entitled to but don't know it, fraudulent citizens who are deliberately claiming the credit improperly, and then the fraudulent tax preparers that are taking advantage of ignorant citizens by making a claim that the citizen has no idea is a fraudulent claim. When you wrap those three things together, you get a program where 27% of the payments are wrong, are improper payments at some level. It can't continue. We are at the point in the United States with our budgets where 7.1 trillion was spent. The IRS, the federal government, only collected about 5.3 trillion. So these deficits are massively out of whack. And where you start to get that under control is by getting rid of the programs that are highly susceptible to fraud and abuse. These refundable credits are at the top of the list.
We had high hopes for the Doge, but they took him out back and shot him. What do we expect? What do we really expect to happen? But on that note, if you're not one of the three people, one of the ignorants, one of the fraudulents, and one of the tax preparers who are fraudulently taking advantage of this EITC, it probably means you aren't actually looking into the EITC yet, which we invite you to look into it, see if you apply. If you don't apply, obviously don't commit fraud. If you do apply, take advantage of it, maliciously comply with the government, get your money back as long as you can. They're giving it to everyone.
Qualification is the key. If you're not sure, go on the IRS's website. In their search box, just put in EITC qualifications. The IRS has a number of fact statements and guidance that will show you who qualifies and who doesn't. If you qualify, claim it. If you don't qualify, don't claim it. Because if you deliberately make a claim on a tax return that you know to be false, remember that tax return is signed under penalty of perjury. That becomes a felony. False statement under oath is a felony. It could be tax fraud. It could be the submission of a deliberately false document. These are serious criminal additional charges. If you qualify, claim it, and if you don't qualify, do not claim it.
It's as simple as that. Dan, tell them where else they could follow along with your taxpayers' rights.
I'm on the social media outlets all over the place. I'm at Pillow Talks Taxes. I'm on TikTok. I'm on True Social. I'm on LinkedIn. Right here on YouTube, our long form videos with Josh and me are right here on YouTube. And share these videos, especially with your state and local representatives. And if you've got a tax problem, go to my website, TaxHelpOnline.com. Buy any book off my website at any price point and get a free 15-minute consultation directly with me. I can get you on track to resolving your problem no matter what it is. There's no such thing as a hopeless tax case. Go to my website now, Tax Help Online, and start the process of getting your problem solved once and for all.